Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, as well as our co-host Murdoch Capital Partners and TA Advisory, we're very pleased you have joined us for today's uranium and vanadium company presentations. Our next live presentation is from Kraken Energy Corp. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with Kraken Energy, please click on the Meetings tab found in the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Matthew Schwab, President and CEO of Kraken Energy Corp, which trades on the OTCQB venture market under the symbol UUSAF and also on the CSE under the symbol UUSA. Welcome, Matthew.
Thank you very much, Eric. I'm happy to be here, and I'm pleased to give everybody an update on the evolving story of Kraken Energy as we move forward with the company. For anybody who's unfamiliar with Kraken Energy to this point, we're a rather new junior uranium company in the market. We started trading last year as of June on the OTC and the CSE. Things have been changing very quickly with the company, and we're really working towards building up a hub and spoke mining model, a realistic and feasible hub and spoke mining model for domestic uranium production in the United States. And in doing that, we're looking at a very, very specific criteria for our exploration model going forward. And, meeting those check boxes as we go across, our three current programs or projects all meet those criteria. And the first one being, we're really focused on skipping the stage of greenfields exploration. It's a big investment risk with junior companies. So we're looking for projects in the US that have either past production history or previously defined resource, whether it's compliant or not, or at very least some advanced stage of exploration with uranium assays to back that up. Following that, we're looking for mining-friendly jurisdictions, primarily Nevada, but also entertaining project acquisitions in Wyoming, Utah, Idaho, and maybe even Washington and Arizona as we expand our portfolio. Focusing on regionally high grades, all three of our properties so far have previous production grades of 0.2% or greater, and all of them have amazing infrastructure where they're accessible year-round. We have roads to and through the properties, as well as power lines crossing or at least nearby each of the three properties, and water sources that are available year-round. All three of our properties currently have value-added metals, whether they be copper, gold, silver, and even molybdenum. But it adds to the shareholder value of the properties as we keep building up our portfolio. Bringing that all together is the team that we've put in place, and we'll touch on that in a moment. So looking at the three properties that we have at the moment, they're strategically placed across Nevada, being Garfield Hills, the previously producing Apex uranium mine, and our newest acquisition being Huber Hills. Garfield Hills, we've been drilling on since November, and originally, based on historical data, it had a projected strike length of about 400 meters of mineralization, based on historic drilling results of 0.18 and 0.26% U3O8, both over 14-meter intervals. Since then, we've expanded upon that. We've extended the strike length, and things are looking amazing on that project. The Apex uranium mine was previously the largest uranium producer in Nevada. Produced about 106,000 pounds of U3O8 back in the 1950s, an average grade of 0.25%. And again, our newest acquisition being Huber Hills was Elko County's largest uranium producer at a production grade of 0.24% U3O8. Just touching back on the initial point that I mentioned, we really are focused on bringing multiple assets together into this hub and spoke based mining model. That's where our project started. Everything that we've looked at so far was initially brought into production as a hub and spoke model, where they were all mined concurrently and brought together in a central milling facility. And that's what we're looking to do again with the assets that we're bringing together. Quick look at our capital structure. We currently have just a little over 64 million shares fully diluted outstanding. Cash, we've got about $10 million in the bank right now, so we're fully financed and looking very aggressively to move forward with our exploration projects in the coming year. As it stands right now, 22% of our current shareholdings are within management and insiders. Touching back on the team that we've put together, we really focused on bringing together the full spectrum of people with uranium experience, from greenfields exploration through discovery, brownfields, feasibility and development, all the way through to production. Garrett Ainsworth as our chairman. He's got an outstanding history in the uranium market, as well as Galen McNamara and Troy Beaujolais, who both spent time at NextGen, Cameco, a lot of time in the Athabasca Basin, and really bring the entire team together. We keep focusing as we move forward. Our newest addition to the team being our senior geologist, Madeline Berry. She has an extensive history in project management in Northern Canada and also has a history at NextGen Energy. So jumping right into our projects, Garfield Hills being the actively drilling program right now. As I mentioned, we've been working there since November and things are looking amazing. The current property is about 1,300 hectares. We're very nicely placed 12 kilometers east of Hawthorne, Nevada, with amazing access to infrastructure, to service providers and mining supplies across the board. There's a power line running right through the property, road access straight to it and across the property, easy access to water, and we have the option to acquire 100% of this property. As previously mentioned, we built this exploration program up off of historic results of 0.18% and 0.26%, both over 14-meter intervals. We're definitely working towards confirming those historic results as we target additional areas on the property, build out that exploration plan, and look to build up a resource as we move forward. In saying that, we've approached all of our properties with a very similar exploration mentality. We start off with high-resolution UAV radiometric and magnetic surveys. We follow that up with ground truthing using a handheld scintillometer, getting out there, taking some ground samples, and sending those for assay. On Garfield Hills specifically, we've identified 5 additional target areas that have ground-based samples that meet or exceed what we saw at the original drilling area where we are active right now. So things are looking amazing. We're moving forward with that, and we look forward to 2023 on this property. The original flagship of the company was the Apex uranium mine, which I said was Nevada's largest past-producing uranium mine back in the 1950s. And looking at the overall structure of the Apex property, we've expanded that very aggressively to almost 4,000 hectares. We're 5 minutes away from Austin, Nevada. Again, perfect infrastructure. Roads across the property, electricity access, as well as water year-round. We own 100% of the property, and we can acquire the NSR back through a royalty structure, which will benefit everybody that's a shareholder of the company. So looking at the overall, layout of the Apex property, we have a past-producing Apex mine on the west side, past-producing Lowboy mine on the east side, 13 kilometers of proven uranium mineralization strike length across the property with multiple showings across it that grade anywhere from 1% to 3.19% on surface to follow up on the underground results that we've seen in the property in the past. Just another highlight, talking about the previous production grades. So Apex produced at an average grade of 0.25% and produced 106,000 pounds of U3O8 back in the 1950s. This property was initially brought on into production as a silver mine, which you'll see in the next slide, back in the early 1900s. But due to the incentives that were offered by the US government, it finally shifted to a uranium production model in the 1950s and did that successfully for about a decade before the incentives were taken away by the US government. And that kind of builds up our exploration model and how we're approaching project acquisition and looking at new opportunities in Nevada and the surrounding states. So just another note that back in the 1950s, as the incentives were being offered and everybody was excited about uranium in the United States, it was noted that the Apex mine was the primary uranium mine in the continental United States, and we're looking to bring all of these assets back together to achieve the same goal and move forward with these as the same mining model. Looking at some of the grades, it's easy to see why we want to go back to these properties. Looking at 3.1 meters at 1.3%, as well as 34 meters at 0.4%, 15 meters at 0.5%. These grades are phenomenal or significant across the board. It doesn't matter where you are regionally or not. These are the reasons that we're going back to these properties, and we see great potential to move forward with them in a concurrent mining model. Just correlating again back to the underground drilling results and bringing them to the surface, there was a 250-ton bulk sample taken from underground at Apex that graded 0.7%, as well as surface grades that come back at 1 to 3.2%. And everything looks fantastic. We're carrying this forward based on, again, the airborne radiometrics and the ground truthing results that we've seen recently. So we're going to move forward, hopefully, in this spring with a drilling program on Apex. On top of that, as I mentioned, we're looking at value-added metals across all of our properties. Apex has results back to the early 1900s of 7,300 grams per ton silver, as well as 15 grams per ton gold. And we've got copper on multiple properties and molybdenum on our most recently staked property, Huber Hills. Our most recent acquisition or staking opportunity was Huber Hills, hour and a half northwest of Elko, Nevada. And this was at one point the largest uranium producer in the Elko County. Currently, we're sitting at just over 1,000 hectares of staked claims. And again, we're only 2 kilometers east of Mountain City, Nevada. Perfect infrastructure, road access, year-round accessibility, and great support for our exploration programs going forward. Previous production, again, a big highlight. We had a previous production grade of 0.24%, and recent exploration back in 2007, we had two 4.5 meter channel samples that came back at 0.1 and 0.149% U3 respectively. So as I mentioned, we're looking to advance our projects concurrently, bring them all together, leapfrogging one from the next as we move forward. These are the current 3 projects and the check marks that we've got as far as progress on each of them. We're going to be actively looking to acquire and stake new properties as we move forward, but we want to do it concurrently and keep moving everything together to get to a feasibility or better stage on multiple projects at the same time. Just a very quick snapshot of the comparison between Kraken Energy and other similar companies in the United States and internationally. Point of highlight here is that the only companies that are focused, on this slide that are focused specifically on the U.S. market are Encore, UR Energy, and Western Uranium. So we're well situated. We're at a great entry point at the moment and looking to aggressively move forward in the coming year. And bringing that all back to my original point, we are very focused on providing this US-based hub and spoke mining model to supply the demand, the ever-growing demand in the US for uranium production. Because as we've all seen, anybody who's part of the uranium industry, as contracts are continually signed across the board, uranium prices are going to continue to go up, demand is going to be harder to secure, and the US specifically needs to focus on a domestic model for production to secure their own energy demands moving forward. So I guess that wraps up the presentation. Open it up to questions across the board. Thank you very much for having me today. I look forward to answering anything you have. So just looking back at questions I've got here, I've got one that says, how did you come to acquire the rights to the Apex mine? And is the US government providing incentives to support domestic uranium? Yes, so the US government has recently in the last year announced up to $6 billion in incentives to encourage uranium production and enrichment domestically. We've been in contact, our team has been in contact with multiple contacts of the US government. And what they're looking for right now is projects that are at feasibility stage or better. And going back to my original statement, that's why we're looking to advance multiple projects concurrently to that stage so that we can try and take advantage of those incentives while they're still being offered. There's just a very brief question there asking, Sorry, they're jumping around me here. Um, why were you able to acquire these properties? So we're looking at project acquisition in a varied scope. We're looking at staking opportunities. We're looking at purchase or option opportunities, kind of across the board. Anything that meets those criteria that I outlined earlier in the presentation. And we're actually very, very well situated because if you look back to my slide about Apex, I'll just go back to this one. Sorry, give me 1 second. This is really where uranium production in the U.S. reached its highlight in the last century, and it was because of the incentives that were offered by the U.S. government. And when those were taken away at the end of the 50s, uranium production was largely forgotten. So for the last 60, 70 years, these projects have been lost, have been hidden, and we have a great opportunity right now to go back and cherry pick through the files that we can find, look at the properties, look at the opportunities for previous producers or previously advanced projects, and build up our portfolio based on that. I've got a question here asking about scintillometer results from the holes at Garfield. So, based on the last press release that we put out from Garfield Hills, things are looking really well, really good. We've confirmed that uranium mineralization is on the property in the areas that we're looking at. We've also expanded beyond that, looking at new target areas, and it hasn't been released yet. But again, things are looking amazing, and we're stepping out in multiple directions, expanding that strike length and building to our exploration model for the property as we go. Another question here, are the mines underground? So what we're looking at are very conventional assets. We do not want to entertain projects that have very intricate or expensive infrastructure costs. That's one of the very key points of what we do in our project evaluation stages. Is we want near or at surface assets that we can develop conventionally and not worry about underground infrastructure costs, ISR infrastructure costs, and move forward in a much simpler manner to de-risk our portfolio and make this, like as I said, a very realistic mining model. What else do we have here? So we have one question about permitting issues. We actually have no permitting issues at the moment. So Garfield Hills, we decided to move forward with that property because of the ease of permitting. We have gone through the process for Apex, meeting all of the benchmarks and all of the check marks for the U.S. Forest Service for permitting. And we expect to have our final submission done this week with a positive answer in the coming month or so. One question here about our current financing state. So we do have roughly 10 million in the bank right now, and yes, we do, based on our budget, that takes us all the way through 2023 for our exploration programs on all three properties. So we're happy with that situation, and we're moving forward aggressively with our exploration in that regard. There's one question here as far as processing. So that's an ongoing question and conversation. Of course, it's definitely critical to our hub and spoke mining model. We don't have an answer on that one, but there is currently a consortium of U.S. uranium companies that are looking to privately finance and bring together a new milling facility in the United States. There are other options as well as U.S. government incentives that we plan to try and capitalize on to move forward. And if we have to work together with other companies, that's fantastic. There are multiple options that we're pursuing at the moment. I missed one of the original questions at the top here. So it's asking about one of our largest shareholders, Michael Gentili. I think at the moment he owns roughly 2.5% of the company. I think at this point I've answered most of the questions on this list. Feel free to give me a quick poke if I've missed any of your questions, everybody. But I think that's bringing us pretty much to the end. So anybody who is looking for more information on the company, feel free to reach out to myself directly or hit up our website or any of our social media feeds on Twitter, LinkedIn, or Facebook. As well as the initial introduction, we trade on the OTCQB as UUSAF and on the CSE as UUSA.